there are definitely some clouds on the horizon. And I said, you know what, the next time I have a really good idea, and adults, if you will, say it's a bad idea, I'm just going to do it anyway. And that became my iconoclastic willingness to go against the system. Key to happiness and business success. Ultimately, I think optimism is really important, and it has to be justified optimism. I've always been a big free speech kind of advocate. One of my big driving forces in life was to be independent. We would be very well served as a country if we had, I would say, younger and alternative candidates, a viable alternative to Biden or Trump.
Would you ever run?
So I do think the pressure on the regional banking system, you're going to start to see more of it come now on the commercial real estate side. You know what? Everything that is bad that happens to me is actually good. I just need to reframe my life and think about it.
Bill Ackman, founder and CEO of Pershing Square. It is so great to welcome you on the show. And Bill, it's great to see you again. Thank you so much for joining me today.
Sure. Thanks for having me.
Well, Bill, we've known each other for many years, and this is a conversation I've wanted to have for a long time. So I'm so grateful to have you on today. And Bill, I'd actually like to start going back to some of your earlier years, revisiting your time at Harvard Business School, because when I was preparing for this interview, I learned that there wasn't an investing class when you were a Harvard Business School student. So you did your own self-study. Can you take me back to that time, and why did you go to HBS if you wanted to be an investor and they didn't have an investing class?
Well, I made the first mistake that many investors make is they buy a stock without doing any due diligence, right? So I wasn't buying a stock, but I was making an investment in my education. And I went to business school to kind of transition from a real estate services, mortgage finance type business to being a principal, being an investor. And I thought, okay, Harvard's the best business school, just based on the brand. But I didn't read a course catalog. And so I showed up my first day. They handed me like this thick course catalog, and I started looking for the investing classes. They had only one, and it was a class where you learned how to be like the CEO of a Fidelity Investments. It wasn't about, leading an asset management business. It was not about being the next Warren Buffett. So I was forced into a self-study program.
And as part of that self-study, you opened your own brokerage account. You bought a stock. Take me back to that. What did you do? Sure.
Actually, I opened a Fidelity Spartan brokerage account. I remember it well. I had about $40,000 to my name that my parents were paying for my tuition. So I was supposed to pay for everything else. I decided to make that I said, worst case, if I lose it, it's another year of business school. It cost about $40,000 to go back then. So this was my tuition and investing. And if it worked out, it could be a career. And so opened a brokerage account, and I figured I'd focus on companies where I had a competitive advantage. And I'd spent the last 2 years in real estate and you call it finance, banking. And it was a time, this was, I think I opened the account in October of 1990, which was pretty close to the bottom for bank stocks. And there was a real serious real estate recession kind of underway. That was one of my motivations for going to business school. I thought it'd be difficult times in real estate, good time to be in business school. And I started looking at publicly traded real estate companies. And that's where I made my first investment.
Do you remember what it was? Do you remember what did you buy?
So my first actual investment was I bought Wells Fargo stock for 47 3/4. That was the price. And I had already started following Warren Buffett, and he was a big shareholder at a much higher price. And so, and my thesis was Wells Fargo always was the most conservative in its real estate lending. My dad's firm that I worked for before business school, what they did is they were hired to find financing for developers. And they could never place a loan with Wells Fargo because their entrepreneurial developers didn't have the ability to put up, massive amounts of equity, and they weren't the most conservative clients. But I figured, okay, Wells Fargo, very conservative in lending. And the thesis at the time was that Wells Fargo was going to be insolvent because of their very large real estate exposure. And so I had kind of the Warren Buffett imprimatur, and I had a thesis. And that was the basis for the stock investment. And I bought it, and it fairly quickly went up about 50%. And I'm like, okay, this is cool.
Okay. Yeah, I'd say so. I love that.
The first stock I bought, I lost half my money. I probably would be doing something else.
Yeah, well, except for you are someone who does learn from mistakes too. But that I love that that foray into investing. I actually had no idea what your first stock was, so appreciate you sharing that. Okay, when you were coming out of business school, you started your first fund, Gotham Partners. I know your father didn't want you to go do a fund, so I do want to hear about that because that is interesting to go against like a parent's advice. But you and your partner were raising money. I think this was actually really unusual to be so young and going out on your own. And I've heard you describe it as blind dating. And I want to know, I think you got 6 yeses. How many no's did you have to go through and how do you deal with rejection? Take us back to that time in your life.
Sure. So it was probably a time I was doing a lot of blind dating. So perhaps I was prepared for rejection. But we probably contacted well over 100 people and we had 6 say yes. And yes, my dad thought it was a bad idea. First, he wanted me to go go back to work for him. And that didn't make any sense. Wanted to do my own thing. He said, Billy, got to be an entrepreneur. Come work for me. I'm like, that's not being an entrepreneur, Dad. So I wanted to do my own thing. The problem was raising capital with no experience. And Seth Klarman had graduated from HBS a decade before us. And he had started a hedge fund with a bunch of business school professors who were kind of the face of the firm. He was really doing a lot of the work. And I kind of used Seth's example, although we did not have the imprimatur of famous business school professors to launch the firm.
Yeah. I went back and I read Confidence Game, which it's an incredible read for the folks who are watching and listening. And one of the things that really stood out to me in that story, and this story is MBIA short, one of the most famous shorts while you were at Gotham too. And my question for you, this is something I wanted to bring up with you is during that time was you were calling out, when you called out MBIA with the famed white paper, is MBIA AAA, you were really calling out the system. I imagine a lot of folks were making money off of that existing system. And you called it out, clearly was insolvent. I know it took several years to play out. But as a young person running your first fund, how are you able to go against the system, if you will? What was it that made you able to do that when it was probably a system that was making a lot of people wealthy at the time?
Sure. So actually, what motivated most of my business decisions right around that time was my first entrepreneurial idea was I wrote a book. And I wrote a book on how to write a college application essay when I was in college. And I remember the time of writing essays, and I thought, wow, when I was at college, I said, this would be kind of a cool idea. And I started collecting up essays of people who had, gotten into Harvard. And it was a really incredible collection of essays. And I put them together in a book, interviewed a bunch of admissions officers, and wrote a book. And then I didn't know anything about how to get a book published. So I asked a friend of the family's advice who was an author, and he said, I'll send it around to a few places, but it's too specific. No one's going to be interested in a book just on college applications or the college essay, which is really what the book was about. And ultimately, the book, I got a couple of job offers, and I was rejected with the book. And then a year later, 2 guys from Yale wrote a book on how to write a college application essay. Apparently, they heard about this idea. They thought it was a good one. They did their own version. It became a New York Times #1 bestseller. And I suffered severe psychological torture because I knew that it was the right thing to do, but I got discouraged by kind of grown-ups, adults. And I said, you know what, the next time I have a really good idea, I'm just going to, and adults, if you will, say it's a bad idea, I'm just going to do it anyway. And that became my iconoclastic willingness to go against kind of the system or to go against our elders or conventional wisdom. And it worked for me. So there's a reinforcing quality to that.
Yeah, I like that. I do know you as, and I think everyone knows you, you're incredibly persistent. What are the origins of your persistence? I get that story, but where do you think that comes from? Is that nature or nurture?
Well, it's some part, it's probably both. I would say my father was one of the most persistent people in the world. The nature of his job required a kind of dogged persistence and a willingness to take rejection. So perhaps I heard that at the dining room table. And my mom, who's alive and well, it was similar. When I was a kid, the rail system to Westchester was terrible. There were trains from the 1950s, these diesel locomotives that would break down all the time. Dad would commute, and sometimes the commute was an hour and a half, sometimes it was 3 hours. One time someone died on the train because they fell through the floor of the car. And my mom decided to fix this. And she basically took over this grassroots organization, ran a petition drive, ended up getting like a $700 million grant from the governor to electrify the rail system. And so I would say I watched persistence in my parents. So I probably, it's like a lot of things. You learn from your parents what works and what doesn't work. And it sort of paid off for me over time.
I love that. I heard, I listened to a great podcast that your wife, Neri, did with Lex Friedman. It just came out. And she said that one of the things that you often say is that incentives drive all human behavior. Could you explain that?
Sure. I think it's sort of self-evident. But if you want to understand why someone's doing something, understand what incentives they have. It works particularly well in business. If you see a company, doing the serial acquisitions, how is the CEO being compensated? How are the shareholders and sort of looking at the business? So just look for incentives and you understand why people do things. So getting those incentives designed correctly is probably one of the most important things one can do as if you're on the board of a company, for example, or on a compensation committee. But it applies to everything.
Yeah, and I imagine it'll definitely come up in this conversation as well. Another framework that I find fascinating from you is the importance of, I guess you kind of put success and failure.
By the way, that Neri's podcast,
phenomenal.
Everyone should watch it. It's really breathtaking.
Honestly, I could not agree more. I thought it was incredibly moving. So I listened to the whole thing. It was phenomenal, and I'd love to have her on this show at some point in the future. But another framework I would like to explore too with you is, and you talk about this often, is learning from mistakes that, good can come from bad, and you tie that in with success. Can you explain that for the folks? Because I think it's really important. And I know you talk to young people about this. Yeah.
So look, the speech I give at sort of business schools, if someone's at a top business school or college or whatever, they had to have a lot of success on their way there. And you learn from success, and it motivates you. But what I've learned over time is that success is success is not a straight line up. There are major bumps along the way, and truly successful people just deal with sort of failure well. And a big part of that is saying, you know what, everything that is bad that happens to me is actually good. I just need to reframe my life and think about it. So it's either, you made a big mistake. Okay, so now you've had experience that you're going to learn from. Or you've had a medical setback, but that motivates you to be really into, nutrition and your health. Almost everything in life that you think of as bad in the short term ends up being good in the long term. You go through a difficult divorce, but it creates the opportunity for you to meet someone new. Just think about, almost every life experience you can look at through that lens. And I think that helps motivate, keeps you optimistic, which I think is a key success factor. And it's hard to get down if you say even the bad things that happen to me are ultimately good once I take a close look.
Do you realize that when you're going through it, like when you're in the thick of it, do you remind yourself of that? Like, going back to, I read a bunch of your letters, and I remember 2015, you said that was a year you would never forget, a very challenging year. Did you have to remind yourself that during that difficult time?
Sure, of course. I've been through enough sort of challenges that I prefer not to have more of them. So, obviously, in this business, you make mistakes, and your goal should be to never make the same mistake twice. And I'm doing my best at that. But, I think a key to happiness and business success, ultimately, I think optimism is really important, and it has to be justified optimism. And you can get there, a series of good judgments or successful decisions compound like investments, right? And if you think about compounding, it's a little bit of progress each day that ultimately gets you to the promised land, if you will, and even with little setbacks, along the way. And that sort of analogy that you can make from investing applies to everything from getting healthy to getting stronger to getting leaner. Pick your personal goal, but a lot of it is just persistence and daily progress, and a willingness to not let setbacks, no matter how large they seem at the time. The first big setback you have will seem devastating if you had a life of success. If you graduated at the top of your class, you got into a good college, or did really well at your first job, and then you screw up in some way, and that can be devastating to people, and it can happen at a time where they're unprepared for it. And I think the key is just saying, okay, this is just part of life, and it's great to read biographies or learn about the lives of people who've dealt with serious challenges, because whatever you're going through, I guess you can find someone who's been through worse.
Yeah, sure. That's a really good point. And even, going through those difficult times when you had those 2 years of really difficult performance and you came through, why do you think, and this is more of like a curiosity, because the hedge fund business is tough. A lot of folks don't make it, they don't survive. What is it? Or what do you think it was that made it so you were able to persevere during those really difficult times?
So one, I love the business. This is a really fascinating, interesting industry where you get to learn about companies and people and economies and complex securities and legal issues. So it's sort of infinitely interesting. And I've always said that, if they didn't pay me to do this, I'd do this anyway. It's kind of an interesting, career. So one, you have to love it. Two, I have a lot of loyalty to the people. I'm a very loyal person, so I think of the people who backed me. You talk back to the Gotham Partners days, the 6 original families that backed a 26-year-old kid with no experience, right? I owe an enormous debt to them. Just trying to think if any of them are still around, sadly. I'm not even sure they're any of the original 6, including my dad, unfortunately. He ultimately was my last of the 6 of the first 5. Once I got 5 legitimate investors, he wanted in, but before that he had no interest. And then over time built up a pretty large base of people who've been supportive, and you want to reward those people. So went through a difficult time. I'm like, okay, we'll make it back and more. And I wasn't going to walk away. And so love the business, loyalty, love the people I work with. We work in a very great kind of environment, and also big believer in the strategy and the long-term outcome, right? So if you can see where you're headed, it doesn't matter so much. What's interesting, if you look at the chart of Pershing Square over time, the kind of difficult period looks like nothing now, and it will look like you won't even notice the little blip, in a decade or 2 decades. And you just have to have that kind of perspective. And if you do, you can keep going.
Yeah. Getting back to the strategy too. And one of the things I read was that you got back to the core principles. There are 8 core principles, and you all have them engraved in a stone tablet that sits on the desk, I believe. Yeah. Explain the principles for folks.
Sure. So, we had an investment strategy we always would articulate, but never sort of codified in a very simplistic, Moses tablet, if you will, of commandments. And, basic commandments are, we want to buy the best businesses in the world, simple, predictable, free cash flow generative, dominant companies, as Warren Buffett would say, with a moat around them. We want businesses like that don't need access to the capital markets to survive. So we don't want a company that has to constantly raise money in order to implement, a business plan. And we want companies with strong balance sheets. We want companies with excellent governance. You don't get all of those things at a fair price. Something's typically missing, but the one thing we don't compromise on is business quality. So the short version of the principles are own the best, super durable growth companies you can find with conservative balance sheets, buy them at attractive prices, and use our influence to make sure that they're managed and governed correctly. And that's it. Pretty simple. Stay away from shorting stocks. avoid commodity sensitive, industries, and you do great. The business investing is very simple, where there's a part of investing that's quite simple. Just buy great businesses and own them, as long as possible. Just make sure you think about the potential for disruption, because we're in a world where technology is a very dynamic force.
I do want to talk about the evolution of Pershing Square. You're known as an activist investor, and reading the 2021 annual letter, how you all have gone through 3 eras, and you're now in Pershing Square 3.0. And maybe it's a bit more of a quieter era. Can you talk to me about that evolution of activist investing and how that's changed over the years?
Sure. So part of it is the marketplace. Part of it is kind of the maturity of the firm, right? When we started in circa 2004, we were not a well-known firm. Pershing Square, no one had heard of at that time. I had some, if you will, reputational equity because I had a previous life at Gotham Partners, had done some activist investments back then. So we also had a limited amount of capital, right? So how do you get a company at that time with a $5 billion market cap, one of our earliest activist investments, Wendy's, the restaurant company, to do a major transformational transaction, that is spinning off their Tim Hortons subsidiary? Well, one, we had to scrape together some money. So the fund made an investment, and then we raised a co-investment vehicle. And then 2, we knocked on the door, and literally we couldn't get a return phone call from management. And so at that time, believe it or not, we hired Blackstone, which had an investment bank as part of their business. And we asked them to write a fairness opinion on what Wendy's would be worth if they spun off their Tim Hortons subsidiary. And they came to a valuation very similar to our number, and we kind of mailed it into the company and filed a 13D. So it was, putting out a sign saying, hey, this thing's really cheap, and then leveraging the credibility of Blackstone, the investment bank, at that point in time. And magically, the company did a spinoff. I call that transactional kind of activism. And our sort of next step along the path was we didn't have to hire Blackstone. We were now, people sort of knew who we were, and then we'd write a public letter, or I'd give a presentation at the Irisone conference, or about an interesting company. But these were always, I would describe them as transactional, meaning a bit like if you hired an investment bank and said, how can I make my company more valuable? What transaction would you recommend we do? A spirits company that owned, Fortune Brands, which owns Titleist Golf and doorknob business and a bunch of spirits. We said, look, if you separate in 3 pieces, you'd be worth more than twice the share price. So that was kind of stage 1, or called Pershing Square 1.0, and it was great, except after Wendy spun off Tim Hortons, the value kind of emerges, and then you have to find another one. Same thing with Fortune Brands, and you're sort of cycling through looking for companies where some form of a transaction will unlock value. It can be corporate change, it could be converting from a C Corp to a REIT, or these kinds of things. So 1, there's a limited universe of those, and 2, you can make pretty good money doing it, but you have to start all over again every time. And Pershing 2.0 was our investment in General Growth, where you had a company where there was a transactional opportunity. You had a business, the stock had declined 99%, and they needed to file for bankruptcy, and that was the transaction that needed to happen. And a lot of value could be unlocked, but it also needed meaningful operational change. And so that's the first board I joined. I joined the board of General Growth, helped take them through the bankruptcy, recruit a new management team, spin off its subsidiary. So much more involved, much more hands-on, much more operational, much more long-term, and much more rewarding. Our original $60 million in General Growth turned into, over $3.5 billion. Our best investment. So of course that got our interest. And then we started focusing more on situations where we could buy a stake and wasn't just a transaction, it was about operational change and bringing in new leadership. Very good early example was bringing in Hunter Harrison at Canadian Pacific. And that's largely what we do today. I would say the difference 3.0 is we don't need to run a proxy contest. In 2013, we bought 14% of Canadian Pacific. We brought in Hunter, big fight, big battle, big proxy contest. I think 20 years in, people kind of know who we are. They don't want to have a proxy contest. And, nice guy, not like some saber rattling activist type investor. I have no interest in a big media firestorm. And our experience has been, Chipotle being a very good example. They were going through a very, very difficult time. The stock was cut in half. They had food safety issues. Founder Steve Ells had done an amazing job building this brand from, one store into a very successful chain, but it hit some challenges. And we bought 10% of the company, and they welcomed us onto the board. And they gave us 4 seats out of 8. 4 left, 4 joined, 2 were actual affiliates, 2 were we mutually agreed upon. And then we worked with Steve, ultimately elevated him to chairman, recruited Brian Nickel to run the company. And, the stock was $265 a share when we got Brian, when Brian took the job. And one of the beauties of this form of activism is after we hired him, the stock was up $5 or something. We bought more. The stock today is almost $2,000 a share, maybe 6 or so years later. So that kind of investing where you can buy a great business, make sure the right leadership's running it, own it for ideally forever, more tax efficient, you should really know the companies, and you build relationships with management. That's really what we're doing today. So I call that 3.0. I don't know that there's a 4.0, but I think perhaps this is the latest. Maybe there'll be a 3.1, but there won't be a 4.0.
Do you think you'll ever run a proxy in the future, or are you finished with those?
I would say that's an extremely low probability event.
Yeah. I am curious, maybe more of the space of activist investing. Has the rise of passive indexing, has that made activist investing, I guess maybe more the activist investing where you would run proxies, has it made it more challenging or difficult?
I would say, there are a number of presidential candidates running today saying, some combination of BlackRock, State Street, Northern Trust, control America. And there's some truth to that, or a lot of truth to that. And that collection of shareholders owns, approaching a third, 25% to a third of many companies. Now, I think, particularly the BlackRocks of the world have gotten a lot of heat on, their points of view on ESG and energy and so on. I think they would desperately like to be out of I think they enjoyed for a moment all the influence they had. Larry Fink, in his various letters, I think perhaps for a moment he enjoyed that. And then it became a real business issue for the company. And I think what's happening is you're seeing some of those index funds today actually, giving the vote to the underlying, trying to give the vote, if you will, to the underlying shareholders, which is you can do in the case of big institutions, much harder for retail. But at least, the retail perhaps should be able to vote directly on issues of substance, like a proxy contest, or people should be able to put in their point of view on ESG or the environment. I don't think you're going to see BlackRock lead an activist campaign anywhere, or State Street or any of the other, big index providers. They really rely on the activists, if you will, that buy 5-10% of a company. It's a major position for them. They lead a campaign. They recruit a management team or new board members. They rely on the activists, if you will, to create the opportunity for alternatives. I think it's a great world for the passive funds because they don't have to spend the money, and ultimately they get to decide. They have a big impact on the outcomes. I would say I don't know that it's made it more challenging. As long as the proxy, as long as the BlackRocks and index providers are taking that voting seriously or passing it through to their underlying shareholders or mutual fund owners, I think the outcomes. I think we're headed in the right direction. Let's put it that way. There's a lot more scrutiny on how they're voting, which I think is forcing them to take all of these various issues seriously. Years ago, it was amazing to me that, these firms would have to vote, 10,000 proxies, in 1 month, and they might have, they had 4 people responsible for the voting decisions, or 10 or 12 or 15. Just made no sense.
Let me bring up another recent development with you, and that's in recent years, and that's the use of Twitter. And I did learn that you invested alongside Elon Musk in the leveraged buyout of Twitter. Now it's known as X, of course. My question for you, though, is, the ability to go direct. Do you not have to use the media as much anymore? I want to hear just your thoughts on the ability to go direct through Twitter.
Sure. So first of all, alongside is too strong a word on my investment in Twitter. Elon put up $25 billion and we made a $10 million investment. Right? I did actually through the Pershing Square Foundation, part of our free speech initiative. And I felt what he was doing on the free speech side was actually really quite important. It was more that motivated the investment more than the potential for a profit. Although I think he'll do quite well ultimately with Twitter. But look, I think one, I don't feel like we need to quote unquote use the media, but the media is a very, very important force. And one of the great things about Twitter is you can have a platform to reach an enormous number of people instantly. I guess that's the danger of it, but it's also the opportunity. I've always been a big free speech kind of advocate. One of my big driving forces in life was to be independent financially, but ultimately, so I could live the life I wanted to live, and so I could say the things I wanted to say. And I've made good progress personally, business-wise, financially, and Twitter is a great way for me to speak and unexcerpted. The problem, even with the problem with the CNBCs of the world, even though I think it's a great network and I enjoy watching, is you can go on there for 30 minutes and then they can take a 15-second segment and then put that out multiple times over the course of the day, and that can really change the character of what you said over a 28-minute interview. And the beauty of Twitter is what I said is what I said, and no one can filter it in a way, which I think is very powerful. So I think they're both good forms of communication, and it's also a very powerful way to correct something. If someone were to write an article that's not correct, instead of begging the newspaper for a correction, which was the old version, and they put it, 4 weeks later on, they bury it someplace in the newspaper. Here you can out a reporter, if you will, who writes an inaccurate article very quickly. So I think it's a very powerful tool, and I think it will be. And I think it's an increasingly competitive form of source of information for people, because you can hear all sides of an issue.
Yeah. Well, it's one of the reasons I love longer form conversations, like podcasting, for example.
Totally agree.
As a former member of the media, if you will. You've also shared a lot of macro updates lately, and that is fascinating to me. And you've made some really spot on macro calls over the years. Bill, what's the macro assessment for you today? So
what's interesting is we did go through a period where I felt almost like I had a crystal ball of what was going to happen. Okay, really beginning kind of January 2020 with COVID, and then, on interest rates, and pretty strong view of what was going to happen with the economy. I would say the crystal ball has clouded a bit in the last period. I think these are unusual economic times, and perhaps we always say that, but I don't think this is a pattern that's been repeated, obviously, or it hasn't been for well more than 100 years. And 100 years ago, the response to the pandemic was not the same response that we've had now. But yeah, it's been like for 2 years, people have been saying that a recession's around the corner, and we've had a very different view, and we continue to have this view that I think people are coming around to, that economy is actually still quite strong. And so now, not every participant in the economy is in a great position. A lot, on kind of lower income segments, people have burned through a lot of the COVID savings. But we think the economy is stronger than people think, and that's why we believe for a while that interest rates actually, unfortunately, kind of longer term rates have to continue to go higher. And we've had unprecedented amounts of fiscal stimulus combined with monetary stimulus, combined with COVID, psychological stimulus from coming out of a pandemic. And then, a lot of the fiscal stimulus is kind of longer term infrastructure, type stimulus that has yet to really hit the fully impact the economy. So I think, the coalescence of those factors are keeping the economy pretty strong. And, wages have gone up, and it's unemployment rate is low. It's pretty amazing. The Federal Reserve has raised rates, 500 plus basis points, and the unemployment rate's still below 4%.
Do you think we're due for some pain, or do you think, it sounds like you've outlined the resilience of the economy? A lot of folks miss that. Do you think we're due for pain, or do you think we might actually get through this?
I think the risks are kind of longer term risks. I mean, a meaningful percentage, something like a third of the federal debt, our government's debt, is gets repriced over the next relative short period of time. Interest expense is going to become a much bigger part of the deficit. That is not going to be a contributor to the economy. You can say what you want about defense spending. Some people think we spend too much. Some people think we spend too little. But it actually, we spend $700-800 billion on defense. It's money that goes into people's pockets. It helps the economy. Higher interest rates, I guess, help savers. People who own treasuries. But ultimately, it's going to be a big drag on the economy. And I do worry about the amount of debt we have and the enormous deficits at a time that the economy is strong. So there are definitely some clouds on the horizon, and the level of real interest rates is now meaningfully positive, and that's starting to slow things down. Mortgage rates are high, car payments are high, credit card rates are high, and inflation has made things a lot more expensive. These things will ultimately slow the economy. And we're still in the midst of a war, and there's a lot of political uncertainty, with an upcoming election.
Hence the 30-year hedge that you all have.
Yeah, that's our expression of our view on long rates, and there we just, have a view that we don't see inflation getting back to 2% so quickly, if at all. And if in fact we're in a world of persistent 3% inflation, it doesn't make sense to have a 4.3% or 4.25% treasury. It's got to be 100 basis points or more higher.
Got it. You mentioned the fiscal picture here in the U.S., and you're right, we do have an upcoming election. But maybe my question is kind of using that activist lens, if you will. What are some of the things that you'd like to see fixed or remedied here in the U.S.? Like, what are the things that concern you the most?
Sure. You may have seen on Twitter, I've been elevating various alternatives to Biden and Trump, and I think we would be very well served as a country if we had alternative, I would say, younger and alternative candidates. I think the very high percentage of the population would like an alternative, a viable alternative to Biden or Trump, and I think the country would benefit by that. I'd love to see us in a political. I'd love to see us elect someone not by 51%. A landslide would be great. It would bring the country together. I'm not sure that's possible with the current array of candidates. I for a while had this view that if Jamie Dimon were to run, and probably run as Democrat, he could be the more centrist candidate that really helps the country. But so far, he hasn't put his hat in the ring. But I think the weaker that Biden gets, and he does really appear to be, aging in the job, the more likely that the opportunity for another candidate emerges. And I'm surprised that we haven't had more and better alternative candidates who run for the Democratic nomination, because I think Biden's very beatable by a strong candidate.
Yeah. Would you ever run?
Not today. Is it something I do in the context of my lifetime? It's possible. I mean, I love my day job, so and I've got a lot more to do here. And I've always said that my personal business plan is to have my goal, of course, is to have a better record than Mr. Buffett, and he's got a 60 plus year track record. So I've been at it for 30 years. I got 30 odd years to go, and I don't want to make the same mistake as the Bidens and the older people running for president. So I'm the most likely outcome is I do what I do, sort of some version of forever. But I've always said it's something that I think it would be an interesting job, but not something in the near term. I'm relatively recently married. I've got a 4-year-old child, and I wouldn't want to subject that young family to the life of on the chance I could get elected. I wouldn't want to. I need a lot of permissions to do that, and I wouldn't even ask for a long time.
Totally get it. I want to ask just a couple more questions before I let you go. And going back to just more of like the economic picture here, even this spring, we had some worries around the regional banks. I know you were quite vocal on Twitter. Bill, does that risk still remain?
Sure. So look, a lot of the pressures on regional banks that emerged, the Buffett expression, who's swimming naked when the tide rolls out. Well, the tide rolled out, and that took down a few banks. And I think the government kind of stepping in, effectively saying they were going to guarantee all deposits, enabled, eliminated the risk of a cascade of failures. But if you think about regional banks today, the interest rate picture has not gotten consent. Many banks have large fixed rate portfolios of assets, and those assets have gotten less and less valuable as rates have risen. That's one. I would say the commercial real estate picture has not gotten better. If anything, you're going to start seeing real defaults on particularly with office assets. I'm an investor personally in apartments, and one of our recent deals, a very talented developer built this great new apartment complex in Philadelphia, and it would have been an absolute home run transaction, except for the fact that now that need to refinance a construction loan, the rates are up a ton, and none of the business plans that any developer put together or investor in real estate assets contemplated, the rise in rates and the rise in spreads for certain kinds of assets. And the regional banks have the most exposure to construction loans. So there are going to be a lot of construction loans that won't be able to be repaid. There'll be a lot of restructurings. So either the investor groups are going to have to put in a lot more equity, or the banks are going to start taking some losses. So I do think the pressure on the regional banking system, you're going to start to see more of it come now on the commercial real estate side.
Yeah, commercial real estate side. I also want to bring up technology with you because I noticed that you all made, I believe, your first technology investment. That's Alphabet, Google's parent company, and a thesis around artificial intelligence. How are you thinking about AI and the potential impact on, portfolio companies and also just the opportunity?
Sure. So I would say we pretty much think of every company today has to be a technology company in some form. Chipotle uses technology very effectively to deliver their product. Google, I would say, is more of a pure, what many people think of as Alphabet as a technology company. Look, AI, I think, is a remarkable, transformative technology, hopefully to be used more for good than for evil. And as an investor, you have to spend a lot of time thinking about the potential for disruption. And I would say technology itself is a very powerful disruptive force. AI will be a very material disruptive force in a lot of businesses. And you need to think about the implications of AI for every company you own. Is it an asset or a liability? Is it going to enable the creation of a competitor that will make your lock on a business, vaporize overnight? Does it somehow, fill in the moat so that the army can storm the castle? And I think there's a real risk of that for certain kinds of businesses. And then there are other businesses where it should lead to major cost savings and productivity enhancements. And so that's the work that we're doing. And the Google investment, this is a company we've always admired. We actually owned it briefly. We bought it in the midst of the pandemic. It's a company we followed for a long time. It's always been a little bit expensive for us. And then it just got extraordinarily cheap because of the perception that OpenAI, by the way, if you can hear that, that's a cruise ship on the water.
Yeah.
There are more. But that OpenAI and Microsoft had a big lead in AI. And, we had a different view based on work we had done. And we love the Google advertising franchise and big cost opportunity in the business. And we think it's generally a very well-managed company with a lot of embedded, interesting options. They're barely profitable, if at all, cloud business, so very cheap, super high quality, unlevered, great company in a leadership position in our view at AI. So, at 15 or so times earnings, that seemed pretty attractive. So that's why we bought.
I hear you ticking through your 8 core principles. On the AI front, though, as someone who's known you're known to read like thousands of pages, even going back to the MBIA research, going really deep, like thousands and thousands of pages. Would you ever use AI in your own research process?
I think it's possible. We don't really, we'll use a Bard or a Chat GPT search sometimes as part of a research process. We haven't used AI as a way to kind of, power through, thousands of pages of documents. I would say there have been a few occasions where the need to read thousands of pages of documents was important for an investment. General growth was one of those. MBIA was another. Some of the best things require you to go very, very deep. A lot of the things we've done more recently haven't required that. But we're still, of course, I think every business has to study the importance of and the power of AI in terms of the implications. I have to think about the implications of the Pershing Square business, and I have to think about what the implications will be for the companies we own, companies we might invest in, and are these tools that we can use to enhance productivity.
Yeah, I'm going to tick through two more questions before I let you go. One, I want to talk about philanthropy, the Pershing Square Foundation. Remarkable what you all have done. I believe more than $600 million at this point. And so on the philanthropy side, I want you to talk about that. What are the things that you care the most about?
Sure. So what are the things I care the most about? So I like to right wrongs. So if I feel, if there's a disadvantaged population or the system is somehow, causing harm, so we've everything from, there's a company called Recidivis that we invested in recently, run by a former Google employee, a woman named Clementine Jacoby, whose actually uncle went to prison, and it kind of opened her eyes to the prison system. And basically, to get out, he had to fulfill a series of requirements, and the bureaucracy of the prison system is, as you might imagine, a complete disaster. And the systems they use to track information, imagine like 9 or 10 different databases, probably DOS prompt type technology. And that motivated her to build a company that designed basically an application that enables the prison system to better manage the people on parole and otherwise, and that has enabled people who deserve to be out of the system to get out earlier, simply because the prison system employees were able to manage their caseload more effectively. Actually, the biggest investors with Clementine are the Koch family and Pershing Square. And, we've been on different sides of different issues, but this is one we are totally on the same side of. I would say the big initiatives we've had on medical research, kind of early stage academic, cancer research, more recently neuroscience, Alzheimer's, it's going to be a major issue it is a major issue for the country and many families. So healthcare, economic empowerment, solving, issues like the problem that Clementine's working on. But typically with us, we're motivated when we meet a really talented entrepreneur that's passionate about solving a really important problem. And, we want to help them succeed. And that's where I think we have a competitive advantage as a foundation, backing early stage leaders in solving problems. And by the way, a number of them have been for-profit solutions to problems, and we vastly prefer those because we've had some foundation investments where we've made tenfold returns trying to solve a problem, and of course that gives us more resources that we can then redeploy to solve another important problem.
I love that. Well, you've certainly left us with a lot of lessons, mental models, even throughout this entire conversation. And I know you're helping a lot of the viewers and listeners learn. You talked about the influence your parents had on your life. And as a father of 4 daughters, what kind of influence would you like to leave on your children? What kind of impact would you like to instill there?
I think every parent wants to create happy, passionate, good kids that, leave the world a better place, over the course of their life, and make a contribution. And so, whatever example I can set or whatever advice I can give, I don't know that kids are very good at taking advice. You have to sort of lead more, by example. But, what do you want for your kids? You want them to be happy, find their, life passion, hopefully that turns into a viable career, and then for them to find love. These are, I would say, the most important things in life.
I love it. Well, Bill Ackman, founder and CEO of Pershing Square, thank you so much for being so generous with your time, your ideas, your knowledge. I really, really appreciate you taking the time. Thank you so much, Bill.
Thank you, Julia.